Radio, number one for music, radio, and podcasting, all in one app.
iHeartRadio.
Now on 710 WOR, the Buck Sexton Show. And for Buck, here's Larry Mendte.
That's me, and you're listening to the Voice of New York, 710 WOR. The phone number to call in is 1-800-321-0710, 1-800-321-0710. I hope you don't live and die with the stock market, because you probably almost had a heart attack today. The jobs report is better than anybody expected. More jobs were created. The unemployment rate dropped well under 9, which nobody expected to happen this quickly. And I'm watching the report come out, and you watch the stock market, and it bounced up about 200 points. And I thought, oh, it's going to be a good day. It's going to be a good day for my 401k. Look at that. Look how well it's doing. Then it dropped as low as 628 points. It was a wild ride. And then it went up again, but still down 159. So for 2 days in a row, it's been down. And let's try to make some sense out of all of this. And the guy that I always go to make sense of stuff like this is one of the best in the business in talking about the stock market and finances, not only because he lives and dies it, and you should sign up for his newsletter if you get a chance. He lives and dies this stuff, but he's also a great communicator. Thomas Hayes is the chairman and managing member at Great Hill Capital. Thomas, thank you so much for agreeing to talk to us today.
Thanks so much for having me on, Larry. And I got to say, I heard your opening there. The jobs report absolutely knocked the cover off the ball, okay? We've regained one half of the jobs that we've lost since the COVID crisis. We're down to 8.4% unemployment. You remember we were doing some TV a few months back. Everyone was under their bunkers, and it was March or April. And I said, Larry, we could get to high single-digit unemployment by the end of the year. Never in a million years did I think that we'd get to 8.4% this quickly. And you know,
everybody's been saying the exact Thomas.
Yeah.
Thomas, everybody's been saying the same thing. I mean, everybody today seems stunned that this happened. So my question to you would be, why didn't the stock market take off?
So this is actually a sign of good news and a sign of health. Let me tell you why. Welcome to the reopening trade. So when growth is expected to be slow, money flows to tech and growth stocks because they're perceived to be the only ones that can grow quickly in a slow-growing environment. What's happened, the economic data has continued to come in so strongly, so consistently, that now money managers are moving their money out of the high-flying, heavily weighted tech stocks, and they're starting to move into the cyclical stocks. This happens every single time coming out of a recession. You see a rotation of money into cyclicals because cyclicals do best in the early part of a new cycle when economic growth is galloping, and that's what we're now knocking on the door for. So you saw huge money come out of tech, which got overvalued, and started to move. You know, the bank index was up the last 4 days every single day. You couldn't give banks away for the last 3 months, and now they're starting to perform while tech is taking a breather, and that's really what you're seeing. And you're going to look back in 2 or 3 weeks. Yeah, you're going to have volatility in tech, and people are going to take some money off the table with overvalued stocks. But when you look back and you see overall the rotation, it's a sign of health, it's a sign of economic growth, and it's a sign of what this administration has done, the magnitude and speed to bring this economy back from the dead after the pandemic is absolutely staggering. And a lot of credit goes to Steven Mnuchin, a lot of credit goes to Larry Kudlow and the whole administration. It's been astounding.
Let me ask you about those banking stocks again and why that is important. Does that mean people are borrowing money again?
Yeah, it means, banks are a credit transmission mechanism. So in order to have a recovery, you need credit growth. So you look at the major banks, and you're seeing what's happening in the housing market. It's absolutely off the charts in terms of demand. You're seeing it in the tri-state area. Home prices are going up. We've been in a housing depression for how many years, Larry? And now you're seeing, houses getting bid up beyond the ask price, bidding wars for houses, and we've got 85 million millennials now saying it's time to get out of the city, it's time for housing formation, and that's going to drive the boat, just like we saw with the baby boomers many years ago that drove the boat from 1982 to 2000 when they were doing their housing formation. So this started before COVID. It's dramatically accelerated, and banks are going to be the beneficiary. Here's the other thing, Larry. Usually when you see a sell-off like you saw the last 2 days, people run to treasuries. Well, they weren't running to treasuries. What actually happened is treasury yields went up, which means the yield curve is steepening. All that means in English is banks make more money because the difference between what they pay for capital and what they charge for capital that they lend just got a whole lot better for banks. So the market is now sniffing this out. This is real. We're getting good vaccine news on a daily basis. We're getting good treatment news on a daily basis. We're getting good case numbers on a daily basis. So everything is lining up, and now the market is abruptly figuring this out. You know, for a little while there, Larry, I don't know if you noticed, the last couple of weeks, the inmates were running the asylum. I mean, some of the valuations on these stocks, Zoom reported earnings. Now, look, Zoom, everyone knows Zoom. They're a video thing. We had other video things like Skype before Zoom. But this company, they've grown revenues 9 times in the last 8 quarters. That's great. That's all fine and dandy. They did $664 million of revenues. But the company's valued at $126 billion. The inmates are running the asylum. They're paying 287 times next year's earnings for this stock they were on Monday. They were paying 63 times sales. You got to live 63 more years to realize the benefits you're betting on. It's absolutely staggering what was happening.
I guess you're saying to your clients to sell Zoom at this point if they have it, right?
Well, yeah, I manage a long-short portfolio for accredited investors and qualified institutions, so I take care of that for them, and I keep them out of those excessively valued stocks, and I put them in long-term value that's going to work over time and steady, and it works.
We're talking to Thomas Hayes, chairman and managing member at Great Hill Capital, about the stock market today, and it's been enlightening. It's the first time I've heard somebody say that the stock market going down, and it went down a lot today at one point, is actually a good sign, and you explained that very well. Talk about the future now. A lot of people say that this stock market is artificially high because of all the stimulus money. Is that true, and should people be worried about that?
Well, the market is a discounting mechanism. So the market's looking forward. We'll have maybe a 5.5% worst case scenario contraction in GDP for 2020. But our money supply which is what you're pointing to, the stimulus, the aid, the liquidity, et cetera, our money supply has increased about 25% since March. And historically, that's going to translate, about a quarter of that will translate into GDP. So we could easily see GDP in 2021 of 6 to 6.5%. Those are rates that we haven't seen in decades, and you're seeing it. Actually, you saw it today. Just in the average hourly earnings were up 4.7% year on year. You know, people need employees right now. Believe it or not, they were just competing with the government because of all the different programs that they had in place to help people that lost their jobs during the pandemic. But some of the programs were a little bit too aggressive that incented people to stay home in the short term. And now that those are rolling off, you're seeing employers have to pay up to get people to come back to work, and this is a good thing. You're going to see wage inflation. That's going to be good for everyday people. You're going to be seeing average hourly earnings went up to 34.6. These are all signs of incredible health. If you look at manufacturing this week, Larry, it was 53.1 versus 50.9, the ISM manufacturing. Anything above 50 is expansion, and car and truck sales are booming. So it's just across the board, Larry. Things are good to come. Yeah, there might be some short-term volatility before the election, et cetera, but